One of the most common forms of insurance mis-selling is something called liability insurance when you go to take a home loan from a bank. At this point, the bank RM usually tells you that it's compulsory for you to take this kind of life insurance, which is called liability insurance because it is tied to your home loan. Essentially, the bank wants to make sure that if you pass away, there is an amount left which can pay off the loan that the bank has given you, because of course your earnings are no longer there to pay for that loan. Now, the way that banks do it is with this kind of insurances, there is upfront collection of the premiums of the insurance policy. So it's like a one-time premium, but it just adds up all of the annual premiums that you would be charged. It is almost always more expensive than term life insurance, and if you already have a term life insurance policy, you have an easy solution in which you can just assign that policy to the bank, make the bank the beneficiary, and not be forced to buy this liability insurance. And even if you don't have term life, you can separately buy term life and assign it to the bank. Do not be forced by the bank into buying this kind of insurance. Just to give you an example, for a 1 crore cover, in one policy we found that the bank was charging 2.5 lakhs as the upfront premium, whereas if you had bought a term policy, you were being charged 15,000 per year for 30 years, and the discounted value of that is 1.5 lakhs. So 1 lakh less than what the bank was actually charging you for this. And the reason is because the bank has a lot of commission, it wants to make commission income from you, and that's why you are forced to buy this. So as I said, instead please buy term insurance, term life insurance, and assign it to the bank. And in fact, if you have enough assets to take care of the loan, you can just show proof of those assets. For example, if you have mutual fund investments or a stock portfolio or bank FDs which exceed the value of the loan, you don't need insurance at all. You just have to show that to the bank, and they should not be forcing you to buy insurance. Of course, you might wonder, then why are you taking the loan in the first place? There can be many reasons for this. It could be because of tax efficiency, or because you don't want to redeem money from your stock portfolio. Whatever it is, if you have enough assets, you don't need insurance at all with a loan. Final thing to remember, this kind of insurance is a big problem if you want to change or port your loan to a different bank, also called a balance transfer, because the new bank then forces you to buy another liability insurance policy. They don't accept the existing one, and so you have another cost while porting your home loan. So really please avoid this kind of insurance. It is frequently missold by banks, but you do have choices.